Can China still overtake the US and become the world's largest economy? If so, when might this happen? With current geopolitical tensions between China and the US, some experts predict China may not surpass the US at all. If you're looking for a quick answer, here it is. In an average scenario, China's rise to become the world's largest economy will take longer than previously thought. Assuming a 5% annual growth rate, China could overtake the United States around 2035. So if we only consider GDP, China will eventually surpass the US. It's not a question of if, but when. According to analysts at Citi Research, China's rapid and steady economic growth makes this outcome inevitable. However, even with a larger overall economy, China's per capita income will still be much lower than that of the US. This means that while surpassing the US in GDP is a significant milestone, it does not indicate that China's economic development is complete. In this video, we will discuss why China is able to surpass the United States and why its economy hasn't collapsed. But before we continue, make sure you hit the like button and subscribe to this channel to show your support. Now let's dive in. The peak China myth. Many economic institutions still believe that China's GDP will surpass that of the United States by 2035. However, some analysts argue that China will never exceed the United States in total economic volume, especially since the gap between China's GDP and that of the US has widened in the past 2 years. These views don't align with long-term economic trends. In 2023, China saw a GDP growth rate of 5.2%, while the US had just 2.5% growth. The widening gap between the two nations' GDPs is mainly due to the depreciation of China's renminbi against the US dollar. The idea of an imminent Chinese collapse, famously predicted by Gordon Chang over 2 decades ago, has finally lost popularity. However, there is still hesitation to acknowledge China's continued rise, giving rise to a new term, peak China. Many Western media outlets have coined the term peak China, suggesting that China's economic growth has peaked and will soon decline. For instance, an article from the Carnegie Endowment claims that China's annual GDP growth is unlikely to exceed 2 to 3% for many years. However, this prediction has proven inaccurate. China's GDP growth rate for 2023 was 5.2%, surpassing the expected 3%. Many peak China analysts don't realize that the Chinese government isn't concerned about whether its GDP surpasses that of the United States. In 2014, the International Monetary Fund used purchasing power parity to declare China the world's top economic power, ahead of the US. The Chinese central government responded to this without any major reaction. For the past 4 decades, the idea of outstripping the US in GDP has never appeared in official Chinese documents nor been a topic among China's leaders. China's focus is not on outdoing others, but on improving its own standards for a better quality of life. China's real estate crisis. Alongside the peak China theory, Western media frequently report on the supposed collapse of China's real estate industry. While it's true that China's property sector faces challenges, the Chinese government doesn't seem overly concerned. Real estate remains important to the Chinese economy, especially with projections that 100 million people will move to urban areas over the next decade, increasing demand for housing. However, the sector's significance is declining, with housing prices gradually stabilizing. It's true that commercial housing sales dropped from 18 trillion yuan in 2021 to 11.7 trillion yuan in 2023. However, private investment in China grew by 9% in 2023, driven by the booming new 3 industries: solar power, electric vehicles, and batteries. These sectors are offsetting the slowdown in real estate. First, The photovoltaic industry has grown remarkably, with the Chinese market expanding by over 20% in the last decade. It now has a market size of about 2 trillion yuan and over 50% of the global market share. In 2022, China installed as much solar capacity as the rest of the world combined. In 2023, it doubled new solar installations, increased new wind capacity by 66%, and nearly quadrupled energy storage additions. Today, China holds more than 80% of the world's solar manufacturing capacity. Second, new energy vehicles also saw significant growth, with total sales reaching approximately 5 trillion yuan in 2023. After 9 years as the world's largest car production and sales hub, China became the leading car exporter in 2023, exporting 4.91 million vehicles compared to Japan's 4.42 million. And third, China dominates the lithium battery market, with 6 of the world's top 10 power battery manufacturers and more than half of the global market share. China's early entry into the battery industry in 2008 gave it a significant advantage. Compared to the US and Europe, China's new economy not only provides an alternative to real estate for economic growth, but also helps mitigate global warming. This shift from real estate dependence to new manufacturing highlights China's high-quality economic development, a point often missed in discussions of peak China. Foreign investment is fleeing an isolated China. Some reports claim that foreign investments are fleeing China and that companies prefer investing in countries like India, Vietnam, or Mexico. Is this true? Not at all. The US's goal of decoupling from China hasn't materialized. Despite a slight dip in 2023, China still attracted 1.13 trillion yuan in foreign investment, the third highest in history. While labor-intensive industries saw an 8% decline in foreign investment, the high-tech sector received 423 billion yuan, up 1.2% from 2022. Western media often focus on the decline in overall FDI, overlooking the surge of 53,766 new foreign-invested companies in China, a 40% increase. Although investment from the United States decreased, investment from other developed economies grew significantly. For example, investment from France grew 25 times, Sweden's 11 times, and Germany, Australia, and Singapore increased their investments by 212, 186, and 77% respectively. In 2023, bilateral trade between China and Europe was worth $1.2 trillion, slightly down by 1% from the previous year, but still the second highest level ever. Trade between China and the US was about $660 billion, an 11.6% decline from the previous year, but still the third highest figure in history, far surpassing trade levels at the start of the China-US trade war in 2018. These figures highlight the deep interdependence between China and the West, defying attempts at decoupling. Surveys from various countries' chambers of commerce in China show that 80% of multinational companies want to stay in China and are even increasing their investments. Most foreign firms report positive investment returns. Some multinational corporations have withdrawn, not because of political reasons, but due to strong domestic competition in China. Contrary to the isolation advocated in the West, China has consistently welcomed Western companies. China has the world's most comprehensive manufacturing industry chain and consistently welcomes foreign investment. News of Chinese leaders engaging with Western companies is common. Opening up is a national policy and is written into the Chinese constitution. Some economists say that China isn't doing well economically, but we strongly believe that China's economic fundamentals are strong. Let's not forget that China is the top trading partner for over 120 countries, and these trades will only increase over time. Do you agree that China will surpass the United States and become the world's leading economy? Share your thoughts and leave your comments below. If you like this video, hit the like button and most importantly, subscribe to this channel to support us.